Hello, everyone. I'm Ted Dixon, CEO of INK Research. Thanks for stopping by for our big screen initial podcast. We're launching this podcast to take advantage of the screening tools on the INK Research website. We have a number of them, and it's really a differentiating feature, I think, of the INK platform. We'll be able to find stock ideas using our screens you won't be able to find anywhere else. And so today we're going to look at gold miners, taking a look at the June INK Edge Top 20 Mining Report. So I'll get into that in a moment. First, I will take a look at how insiders have been reacting to this recent pullback. And we've got some very good news there, some very encouraging news in terms of what we're seeing on insider sentiment. And before I get into that, I'll just say that I'm wearing an INK t-shirt. We've just launched the INK merch shop, and it features designs that have been created by our own INK employees, not me. I'm sticking to the screens. I don't do fashion design, but we do have some talented people at INK, and so please check that out when you have time and see what you think and help us out if you like what you see. Now, with that, I'll also get into an important part of this stream, and that is our disclaimer saying that nothing that we talk about here is investment advice. It's information only. That anything you hear here is not a stock recommendation. It is not a recommendation to buy or sell securities. Please consult a licensed financial advisor before making any investment decision. Thank you for keeping that in mind. And with that, I'm going to jump right into what we're seeing on the insider sentiment front on this latest pullback in gold and silver stocks. So with that, I will look for the INK market report, and I'll bring that on. So the one we published on Monday. And of course, it highlights our sentiment indicators along with our commentary. You can find this chart under the on inkresearch.com. You can also find it in the report section on Canadian Insider. So if we go to the gold area, we'll see the gold indicator, and the gold indicator has peaked. Okay, you see the light line has peaked well above 1,000. Means over a 1 month period. That means there were like 10 stocks with key insider buying for every one was selling. So that's pretty good. And in fact, you have to go back to 2022 to see that. There's two things here. Why is a peak important? Because that's peak insider buying. That often happens around key support levels for stocks. Now, you can't really determine that until a few days or a few weeks later because it's a coincident to concurrent indicator. But it looks like last week, insiders are kind of signaling, yeah, that was a good level. That was a good opportunistic level to buy. And that's where we saw peak insider buying. That gives us some confidence that we've got a really good support level around these areas for mining stocks. Now, that doesn't mean we can't go lower. Sure can. And if we were to go lower, we would expect the indicator to even go higher and look for another peak. But right now, our base case is we've seen some significant support at the end of June from insiders, and they're kind of saying that was a good kind of buying opportunity period. And we're pretty close to that now. So there we go. Insiders indicating that this is a good environment for the contrarians, for the buyers. Risks remain. But this is something we saw back in 2022 in the summer when the Fed was rushing to raise rates after the COVID stimulus. And, it didn't take long after the peak for the senior producers to gain some traction, and so the producers to start regaining their footing. The junior miners took a lot longer to get into their groove. And in fact, because we still had this hiking cycle, the Fed was extracting liquidity, the junior miners continued to struggle. And in the summer of 2023, which kind of reminds me of where we are now, we had the Fed doing another rate hike. And why did they do this rate hike? Well, my view is it because they had to do the stealth QE around the Silicon Valley bank run. So they did that stealth QE, they pumped liquidity into the system, but Jerome Powell tried to get a little cute and take some of that back through a rate hike. At the time, we're saying, this is not going to be sustainable. They're not going to be able to this rate hike's going to be too risky for the Fed. And shortly thereafter, they started to cut rates again. But basically the junior miners started to regain their momentum early fall of 2023. So are we seeing a repeat of that now? Are we back to like the summer of 2023 where we have a tough talking Fed chairman? So he's going to raise rates. The market thinks he's going to raise rates, sort of. But now we also are dealing with a Fed chairman who's not going to give forward guidance. So that means the data is going to even be more important than ever for investors to assess what the Fed could do, since the Fed's not going to be there holding everyone's hand, apparently. So today with the non-farm payroll, we saw a big reaction because it came in less than expected, so less chance for the Fed to raise rates. So I think this data is going to generate a lot of volatility in the market if the Fed doesn't do the forward guidance like it used to. So that's just something to keep in mind. But my view with respect to the path from here for Warsh is that, look, if he wants to raise rates or get the market to raise the rates for him by jawboning it up, he's not going to be able to do it without giving stimulus somewhere else. And why is that? Well, I'm going to go back to this chart I showed in the last live stream, and that is this net interest expense of GDP from the Peterson Foundation. And what it shows is basically the net interest expense of federal debt divided by GDP. And as you can see, it's starting to go up very, very fast. So if he's going to raise rates, or the market believes he's going to raise rates, it's even going to go up faster. And we're into this kind of uncharted territory. So that means that there's a risky period here for the Fed. If they push up the net interest expense part of that equation, there's going to be a lot of pressure on them to help with the GDP part of the equation, that's nominal GDP, to add liquidity, probably through stealth QE, through probably something like the reserve management purchases program, which Kevin Warsh extended as his first policy act at the Fed. He extended that program. So it was actually something that was dovish. Now, perhaps you could say taking away forward guidance is hawkish, but I don't think so, because forward guidance could go either way. No, I mean, he implemented a tool to provide stimulus if it's needed. So I think that even if he does kind of threaten rate hikes, we're going to get this stealth QE type scenario. So kind of like the opposite of what Powell did in 2023, but we're not there yet. So far, it's been all talk, no action. All right, so insiders are kind of giving us a thumbs up in terms of the environment for stocks. Let's move into taking a look at how we can use our screens and look at some gold mining stocks that are hitting high up in our screens. I'm going to look at, as I mentioned, the June INK Edge Top 20 Mining Report, and you can find that on Canadian Insider in the up in the reports section. And you can the June 24th is the value date of the rankings, and the report looks like this if you're downloading the PDF. If you're on INK Research, you can also get the HTML version, and that's under the research tab. It's under Top Gold. We used to call it just Top Gold, but now we include all the miners. So now we're going to take a look. We're going to start off by looking at the top ranked stock in the June top mining, and that was McFarland Lake Mining. Now, McFarland Lake Mining, we've been following this basically throughout most of the year. It's working on a 100% owned Juby Gold project in the Abitibi Greenstone Belt in Ontario. Over the last 6 months, we saw some very good senior officer and director buying, including CEO Mark Trevisol. He did that before the stock broke out in May. Now, we were watching for this breakout, and we thought it would probably be drilling news that would break the stock out. But no, it actually broke out when the company announced that mining investor Michael Gentillet would become a significant holder via a financing. Now, the financing was priced at 12 cents. and included a 16-cent warrant for 3 years. And he participated in that. And that just goes to show how some of these players, it's really worth watching, as when they make a move, the market may see it as a sign of approval. I should say now, Michael Gentilet, he's a significant holder in the company. He's a 10% holder. He's not an officer or director. We tend to focus on officers and director generally on our screens, but it is worthwhile keeping some of these major players on your players list. So, for example, Michael Gentilet has lots of investments. He takes a kind of a shotgun approach, I would say. That's how I would characterize it. And McFarland Lake Mining is actually, over the past year, is the stock he's had the biggest put the biggest money in, biggest investment in, for stocks that he is a insider in. Now, there may be other names that he's not an insider in that he may have invested more, and we wouldn't have that data, only the insider data. But it's good to follow these players, and you can put them on your watch list, your players list, and keep track of what they're doing. So, in terms of McFarland Lake Mining, it's got a sunny outlook. It's our number one ranked stock. Again, this is not a stock recommendation. However, it does rank very high. They've got plans to release a new mineral resource estimate for the project probably this month. So will that news be the catalyst that breaks it out further, or we'll have to see how the market reacts? So it could always, react either way. Maybe if it's a sleeper summer, maybe you won't get any reaction until the fall. The next name I want to look at is a dividend payer. Now, this is kind of a different name. It's not your typical mining name. It's Dynacor Group. And they operate a business model where it processes gold sourced from artisanal miners. So this is really a margin business. It currently pays a monthly dividend of 1.333 cents per share for a 16-cent annual dividend. And in Q1, it earned 17 cents per share, up from 13 cents a year ago. It processed 518 tons per day ore, producing 32,791 gold equivalent ounces in terms of what it reported in Q1. Their gold sales were worth 154.1 million, and they realized a margin on that. I calculated about 11.29%. That's up slightly from last year, 11.25%. So 11.29 in Q1 2026 versus 11.25 in Q1 2025. Their guidance for 2026 is midpoint 130,000 gold equivalent ounces. They are expanding their operations. Now, their current operations are in Peru, and they want to expand their processing footprint into Ecuador. And in 2027, they're hoping to have a facility up and going that can produce 300, that can process 300 tons per day. And they also expect to be processing soon in Senegal, West Africa. They're in the final stage of commissioning a 50-ton per day plant there. So we'll have to see if the news comes out soon on the status of that plant. Now, there was a bit of a proxy fight in this company this year, so you might want to, if you're interested in it, take a look at the history there. But from what I can tell, the incumbent board prevailed, and in June they appointed a new CEO. The COO, Daniel Misiano, was promoted to president and CEO, and he will oversee the company's growth. So we'll have to see how the news unfolds at Dynacor Group. I thought that, it's an interesting name in that it pays a dividend. So it's not quite as levered to the gold price as some of as a traditional miner. Another name that has hit our screens that has been, I would say, player driven, where the news of a player coming into the company has given the stock a boost, is Visionary Copper and Gold Mines. It's a symbol VCG. The stock got a boost when it announced that Ross Jennings had taken a position in the company, He controls a family office called the Quaternary Group. And Visionary hit number 14 in our top 20. Just it was so behind Dynacore was number 5, Visionary Copper and Gold number 14. Right now, Visionary's focus is its 100% ownership in the Point Leamington deposit in Newfoundland. It's located 37 kilometers from Grand Falls, Windsor, and about 20 kilometers from the power grid. It's a volcanogenic massive sulfide deposit containing gold, copper, zinc, silver, lead. It does have an existing resource estimate from 2021, but they restarted exploration work. They just finished phase 1, and they've just received permits to do more expansion work on the project. So probably more news coming on that. So and it's a very small company in terms of market cap. So it's a tiny one. It's going to be pretty volatile. But it was just an interesting name that there was another case of a player coming in and having an impact on the stock price. Now, in terms of Mr. Jennings, I would say he takes more of a rifle shot, and he takes more of a rifle shot on things, and as opposed to, I would say, Mr. Gentilet, who takes a more of a shotgun approach. So that leaves us with, I think, the next name, which is a producer, and it's the biggest name on our top 20 list, and that will take us to SSR Mining. It came in at number 18 on the list. SSR Mining had a first quarter production report of 109,914 gold equivalent ounces, and its consolidated cost of sales was $1,727 per ounce. Produces roughly, by my count, 75% gold, 25% silver on a gold equivalent ounces basis. The net diluted income per share was $1.16 in US dollars, and versus US 40 cents per share a year earlier. Now, the company really has focused on North America now, pending the sale of its copper project in Turkey. The copper project had a fatal mine accident in 2024, but they've struck a deal to sell the project for $1.5 billion US. So they're waiting on approvals for that to close. But if it closes, they'll use the money for reinvestment, growth, and capital returns to shareholders, buybacks. Now, I would say that when you look at SSR Mining, there's been no insider buying. And somebody asked, well, how can a stock be so high in the rankings when there's no insider buying? Because we don't just look at insider buying. We also look at holdings, and we also look at relative buying. So SSR Mining has outperformed this year. It's up 44% versus the iShares Global Gold ETF, which is down 3.4. So the fact that you're not seeing any insider selling tells us something. That's why we rely on the INK Edge, because it also puts insider activity in terms of the valuation of a stock, and whether the stock has been going up or going down versus other peers in the market. So the fact that SSR Mining has been outperforming, no insider selling, no profit taking that we can see, then that is helping in its rankings. The stock is outperforming this year, but it's still down 5 years, against the global gold ETF, on a relative basis. So for 5 years, it's up 120%, and the iShares global gold ETF is up, I believe, 167%. So theoretically, it has some longer term ground to make up, and that is. And maybe that is what insiders are waiting for. So we'll have to see. We'll have to see what they do. If they do get that cash, what they're going to do with it. And if the insiders are right, we will certainly be in interesting times in the months ahead. I know it's always difficult during these pullbacks. I know we have some subscribers who said, it's been a difficult time, and it has. But that's kind of that uneasy feeling in your stomach if you're holding a position or adding to it. That's sometimes, the toughest times are sometimes the best times to make an investment move. But again, check with your financial advisor on whether those types of moves are right for you. Again, if you feel like it, please check out our store. Available, you can find it on Canadian Insider. You can find it at the bottom nav bar on inkresearch.com. If you have any ideas in terms of what you'd like me to cover on the screens, whether you'd like me to cover more stocks, less stocks, please let me know. You can do that through Ink Chat. If you're registered on Canadian Insider as an intro member, you can sign up for Ink Chat. Any of our paying subscribers, of course, can also sign up. Just use the email associated with your registration and we'll approve you, and you can join the conversation. You can always send me a direct message. It's where we post some extra reports, backup reports. So it's a really great resource. If you're a member of the Ink platform community, please join Ink Chat. Check us out on Ink Chat once in a while for important information. If there's ever a servage outage, that's where you can go to find out what's going on. If you ever need to give me feedback directly, you can do that confidentially on a direct message. So it's really worth signing up for. Well, thanks for stopping by. I appreciate the time you've taken to hear about our top 20 mining report. And I think we're going to have an interesting summer, and maybe the next screen we'll look at energy. But if you have any other questions, please let me know. Meantime, take care. Good luck. Have a great summer. And we'll see you next time on the Big Screen Podcast.